In this video, we're going to look at drawing triangles on major trends to help you identify the trend of a market. So we are on daily time frame. And what we're going to do is we are just going to look at the market and we are going to add in the major swings. So when we're looking at major swings, we're looking for very obvious, simple movements where we can see the market making a peak and making a pullback. Or if we were in a downtrend, let's say with this move here, we're making a low and then we are pulling back, making a very clear high, and then we are pulling down again, making a low, making a high. So this one here, we wouldn't really include. We're only looking for the ones that jump out of the screen and make themselves very, very obvious to you. And all we do is we take a drawing tool and we follow how the market is moving. We follow the swings, creating the triangles. We then look for the next main swing points. We move up, we move sideways, we have a strong move up, and then we have a nice clean pullback. We then draw into our next swing. Now with this one, you could potentially say you have one here, but it's relatively minor. So what we're going to do is we're just going to stick to the very obvious ones. So we've got a nice strong move up, and then we get the market making a strong pullback. So what are we now doing? We are making a high, we're making a low, we're making a higher high, and a higher low. So now the market is telling us that potentially we are in an uptrending movement. We've got high, the low, the high, the low, and then really this is the confirmation. As we start to break up once again and break above the previous high, the market is moving into the uptrend. We then get a little bit of stalling price action. Here, you can see the triangles. So potentially this is a lower high. So first thing is we want to be a little bit cautious. Now the market comes down and it makes a lower low. However, this is not a significant lower low. You can see it's just the spikes down off of the candles and the market is closing back up. And then we get another strong move to the upside. So really we've got the high, we look at this whole section as our low, and then we get another strong move up. The market then pulls back, we get a higher low once again, we push up and we get a higher high. Now with this higher high, what we can see is it's spiking relatively strongly, and that is what is making the new high. So the market isn't really making any new ground. It's trying to make that higher high and the sellers are stepping in. So first of all, this is giving us a warning that potentially the market is moving into either a range or a downtrend. We still make a higher low, so we're still technically in the uptrend. However, this next movement makes the lower high, and then we start to break down, all the way down, breaking below the previous low. So now the market is telling us that we are potentially moving into a range or a downtrend. And what we're doing is we're using the triangles to help us identify what the market is doing. It's a very, very visual way for you to see and identify the trends of the market. And you can do this on your chart, and then when you load up your chart, you can just quickly reference the triangles. You can even add in the little rectangles, and it's going to tell you what the market has been doing, and you can very easily identify the market trend.